Thanks for joining us today. My name is Carole Foos. I'm a CPA and a partner at OJM Group, and I'm going to talk to you today about PPP loans that were established under the CARES Act. I think probably many of you listening have received a PPP loan and are now in the period of time where you're spending the funds and getting ready to apply for forgiveness. So we want to walk you through some of the new guidance related to that. As a thank you for listening to the webinar, we would like to offer you a free book. We've written several books specifically for physicians, as well as some other books on wealth planning. And any of those are free to webinar viewers today. You can text 555-888, text that number and put in the code OJMWeb to get your free book. Or you can also go to our website, ojmgroup.com, and go to our bookstore to get a free book. So as I mentioned, I'm sure many of you applied for and received a Paycheck Protection Program loan this spring. If you recall, when you applied for the loan, the maximum amount of the loan that you could apply for was based on your average monthly payroll in the 1-year period prior to the loan. Now, some banks used the previous 12 months, some banks used calendar year 2019 for their applicants, but you took an average payroll, maximizing any single employee's annual payroll at $100,000, and you multiplied that average monthly payroll by 2.5, so 2.5 months of your average payroll, or $10 million, whichever was less, would have been the maximum allowable amount of the loan for your business. What has become clear, though, is certainly right after the CARES Act was passed and as the Small Business Administration started going through their guidance, there was a less clear definition of what payroll costs could be included for those of you who applied for a loan and received it, especially if you applied for your loan in the early days of the program. So that guidance has now become more straightforward, and we're going to talk about what those are. Now keep in mind, compensation of any individual employee in excess of an annual salary of $100,000 had to be dropped down to $100,000 and then prorated for the coverage period. And it's important to note that what we've seen in recent guidance that's come out, compensation limits are different for non-owner employees versus owner employees. So I'm going to walk you through some of that today in terms of how you're calculating compensation for various classes of employees. You also might recall that when you applied for the PPP loan, you were required to make a good faith certification that your business needed the loan in order to fund ongoing operations due to the uncertainty surrounding the COVID pandemic. And then after that initial period of loan applications, there really was a lot of press about companies such as Shake Shack receiving loans that maybe they didn't really need because they've got public funds available. You know, these publicly traded companies were able to get loans under the rules. Many of those companies returned loans, and then there was a lot of talk about audits and civil and criminal penalties being incurred. So they have come out with a safe harbor. If your loan amount is less than $2 million, then there is a safe harbor that says you will be presumed to have met that good faith certification and will not be subject to criminal or civil penalties based on the certification, as long as your loan's under $2 million. If your loan is more than $2 million, the SBA has said they will audit all loans above $2 million, and they will also audit a certain percentage of the loans under that $2 million limit. Now, keep in mind, for those with loans under $2 million, while you have the safe harbor from penalties, it is still a good idea to maintain some documentation of your need that you felt at the time you applied for the loan. Some of that documentation would be things like revenue projections. You know, if you were looking at a business shutdown or a greatly reduced ability to run your business, run your practice, and you did some revenue projections to see where you stood and started thinking about cost-cutting measures, keep documentation of that in your file in case you do get audited. You might want to do some things like compare revenue to prior year revenue at the same time, or compare actual revenue to what you had budgeted. If you and your partners or you and your accountant or attorney had discussions about what you could do to cut costs given those decreased revenues, and perhaps you had those discussions and then maybe you still had to cut some costs, but maybe you didn't due to receipt of the PPP loan, just keep a file on that so that if there's any audit or any questions on the forgiveness, you've got that in hand. So I want to talk to you a little bit about the allowable use of your PPP loan proceeds because they're very specific. You're allowed to use that loan for payroll costs. Payroll costs include salaries, wages, commissions, bonuses, vacation and sick leave. You can use it for group health benefits and retirement benefits that the company pays for employees. Now again, owners' group health benefits and retirement benefits will not be included in the calculation. Mortgage interest payments are an eligible use of the loan, as are rent or lease payments on both real and personal property, and utilities payments. And those utilities include electric, gas, water, telephone, and internet. So any of those categories of costs are allowable uses of your loan proceeds. Keep in mind that these PPP loans are non-recourse loans. They did not require a personal guarantee. They did not require collateral. The maturity of the loan will either be 2 years or 5 years, depending on when you received the loan. So if you received your PPP loan prior to June 5th, 2020, prior to the Ppp Flexibility Act passing, your loan document likely has a 2-year loan period. If you receive the money after that date, then the maturity date will be 5 years. So you do have the ability, you and your lender can mutually agree, if you've got a 2-year maturity period on your loan, you can mutually agree to extend that to a 5-year period. There is a 1% interest rate on the loans. Keep in mind that even if your loan is fully forgiven, only the principal of the loan is forgiven, you will still be required to pay that 1% interest. And there's a deferment of principal and interest payments. It was originally set at 6 months, but with the passage of the Ppp Flexibility Act, they have extended that to say your payments will be deferred until your loan forgiveness application has been completed and processed. When we're talking about allowable payroll costs, I want to first talk to you about non-owner employees. So keep in mind the original coverage period, the amount of time you had to use your loan was an 8-week period. With the passage of the Ppp Flexibility Act, you now have the ability to choose either an 8-week period or a 24-week period. So again, wages, salaries, commissions, bonuses, vacation and sick leave that you pay to your employees, you're going to limit for any one employee that to an annualized salary of $100,000. If you choose the 8-week coverage period, which you have the ability to do, again, if your loan was received prior to June 5th, 2020, you have a choice between 8 weeks or 24 weeks. The maximum amount of compensation for any one employee would be $15,385 for an 8-week period. And that's simply $100,000 divided by 52 weeks times 8 weeks. If you choose the 24-week period, similar calculation, but the maximum amount will be $46,154. Keep in mind, you can only include employees who are U.S. residents in the calculation. Now, for your employees who are not owners, you're also allowed to add in benefits. So if you've got employees making under $100,000, you're looking at either that $15,000 or $46,000 number I just mentioned, but on top of that, you can add your employer contributions for that employee's health insurance. And that includes, for those of you who have a self-insurance program, self-insurance costs are also includable, or your employer contributions to employee retirement plans. For owner employees, now an owner employee is considered to be, an owner of an S corporation who is a W-2 employee, a self-employed person, an independent contractor, a partner in a partnership, or if you're a C corporation and you're an owner and also an employee. Cash compensation has some slightly different limits. We're again talking about salary, wages, bonus, vacation pay. But for owner employees, the limit is the lesser of, we're looking at a 24-week coverage period, it's going to be the lesser of $20,833, and that's 2.5 months of compensation at $100,000 annually, or 2.5 months of your 2019 compensation that owner received. So if in 2019 your Schedule C net income was less than $100,000, your W-2 wages from your business was less than $100,000, your partnership income on your K-1 was less than $100,000, you're going to be limited to a prorated amount which equals 2.5 months of that 2019 compensation. If your income in 2019 was greater than $100,000 and you choose the 24-week period, your maximum compensation will be $20,833. So keep in mind that's opposed to $46,251 for your employees. If you choose the 8-week period, you've got that same $15,385 limit that we saw for your employees, unless 8 weeks of your 2019 compensation is less than $15,385, then you're limited to what compensation, 8 weeks of your compensation that you received in 2019. So very important, those are the limits for the owner employees. Also included as an eligible payroll cost are state and local taxes that the company pays, which are assessed on compensation. So what we're talking about there are things like state unemployment taxes, state workers' comp, paid for by the employer. It does not include your employer Social Security or Medicare taxes. It does not include payroll taxes, withheld from employees' wages. And you're looking at employees, gross payroll anyway. Payroll costs allowed are those paid and incurred during your coverage period. So again, let's think about your coverage period. If you receive the loan prior to June 5th, you can choose an 8-week coverage period or a 24-week coverage period. That coverage period is deemed to begin on the date you received your loan. That's when the clock starts ticking. Unless your payroll is run bi-weekly or more often. So if you run payroll every 2 weeks, and let's just say for an example, you received your PPP loan on May 5th, but the next payroll period after that started on May the 8th, then you can choose to have your coverage period start on May the 8th. If your payroll runs, for instance, semi-monthly, you don't have the opportunity to choose that alternate payroll period. Your coverage period will begin on the date your loan was received. Costs either paid or incurred during the coverage period are allowed. So paid for payroll costs means the date that I distribute paychecks or the date that the ACH is initiated. Incurred payroll is allowed if it is paid on the next payroll date following the covered period. So I'm going to give you a couple of examples. If I received my PPP loan on May 5th and my next payroll came out on May 15th, and that payroll period covered May 1st to May 15th, all of the payroll, because it was paid on May 15th, every dollar of payroll in that payroll run is allowable. If my coverage period ends on June 27th and I have payroll that gets paid on June 30th, which covers the period from June 16th to June 30th, then I'm going to prorate that payroll because it wasn't paid during the coverage period, but I can allocate my payroll costs from June 16th to June 27th, the end of my coverage period. And as long as that's paid on June 30th, the next payroll date, I can also include that portion of costs in my eligible costs for forgiveness. Non-payroll costs. These are also those costs that were paid during the coverage period or incurred in the period and paid on the next billing date. Now, under the new PPP Flexibility Act, at least 60% of the loan proceeds need to be used on payroll. So only 40% can be used on non-payroll costs. The non-payroll costs include mortgage interest on real and personal property, as long as that mortgage obligation was in place prior to February 15th, 2020. They include rent or lease payments for real or personal property, as long as the lease was in effect before February 15th, 2020. Utility payments, again, paid during the coverage period or incurred, including electric, gas, water, phone, internet, and transportation, as long as the service began before February 15th, 2020, those are includable. So again, if I've got an electric bill for the month of June, it's not due till July 5th, but my coverage period ends on June 30th, that electric bill that I pay on July 5th would still be eligible as an allowable cost for forgiveness. I want to talk a little bit about that 60%, 40% rule. So if you do not spend at least 60% of the loan proceeds on payroll, then there's going to be a reduction in the forgiveness costs. So as an example, if my PPP loan was $100,000, I want to have it all forgiven, I need to spend $60,000 on payroll, I can spend $40,000 on mortgage interest, rent, utilities. If I don't spend 60% on payroll, let's say I spend $50,000 on payroll in that example, I take $50,000, I divide it by 60%, that gives me $83,333. So the maximum amount of my $100,000 loan that would be forgiven in that instance would be that $83,333, meaning $50,000 of payroll can be forgiven, and then I have $33,333 of non-payroll costs that can be forgiven. There will also be a reduction in your loan forgiveness if you had an employee headcount reduction or if any employees had wages reduced by greater than 25% during the coverage period. There are some exceptions for that though. So in terms of counting your average employees, full-time equivalent employee is considered to be a 40-hour per week employee. So any 40-hour per week employee is counted as 1. 20-hour per week employee is counted as a 0.5, 30-hour per week employees counted as a 0.75. You're going to look at your average full-time equivalent employees per month during your covered period, whether that's 8 weeks or 24 weeks, divide that by either your full-time equivalent employees per month for the period from February 15th to June 30th, 2019, or by your average employees per month for the first 2 months of 2020. You as the borrower get to choose your comparison period. So if you reduced employees, there's going to be a reduction in your forgiveness amount. if you reduce their salary by greater than 25%, for those employees making less than $100,000 per year, there could be a forgiveness. However, if you rehire employees by December 31st or restore their wages or hours to that previous level by December 31st, you won't see a reduction in forgiveness. You also won't be reduced in your forgiveness amount if you tried to rehire an employee and they refuse to come back. So if you have a written offer to rehire at the same compensation and your employee said no, you will not suffer because of that. Recently, the SBA came out with a new easy forgiveness application. It's a pretty simple form and less cumbersome than the long form. You will be eligible to use that easy forgiveness application if any of the following 3 points apply. If you are self-employed, an independent contractor, or a sole proprietor with no other employees, you're eligible to use the easy forgiveness application. If you did not have a greater than 25% wage reduction for your employees making less than $100,000 during the covered period compared to January through the end of March of 2020, and you didn't have a decrease in the number of hours or the FTE headcount from January 1st to the end of your coverage period, then you can use the easy application. Or if you did not have a greater than 25% wage reduction, we're talking about for any single employee, for considering those employees making less than $100,000 per year, again, in your coverage period, your 8-week or 24-week period, compared to the first 3 months of 2020, and you're unable to operate at the same level as before due to guidelines. State has shut your business down, CDC guidelines have said you can't fully operate, then you will be allowed to use that easy form. So essentially, if I didn't reduce any employee's wages by greater than 25%, but maybe my head count was down because I could only partially reopen, they're going to let you use that easy application. If you can't use the easy application, then you go to the long form, and that's where we're looking at those calculations with the coverage periods I had in my last slide, where you're comparing to either February 15th through June 30th of 2019 or the first 2 months of 2020. There are also some miscellaneous provisions that were put in place under the CARES Act. Employer FICA tax credits were made available if you have to pay sick leave or family leave to any of your employees due to COVID-19. There was also an employee retention credit for businesses who were forced to close or suspend operations and revenues dropped by more than 50%. Previously, they had said any payroll costs that you incur for which you're applying for those FICA tax credits, you can't also use that same payroll in your calculations for PPP forgiveness. Now with the Ppp Flexibility Act, they're saying you can actually use the same payroll, have the PPP forgiveness, and still take those FICA tax credits. So work with your CPA and your payroll service provider on those calculations to make sure you're getting the full benefit of those. In addition, many of you might have applied for an EIDL loan. Those economic injury disaster loans were allowed to be used for some additional operating expenses besides payroll, mortgage, interest, rent, and utilities. If you received an EIDL loan and you received one of the emergency advances that were available with those EIDL loans, they will back out the amount of your emergency advance from the forgivable amount of your PPP loan. Thanks again for attending the webinar, and we hope you'll take advantage of our free books for attendees.
OJM is a multidisciplinary wealth management firm, and we have worked with over 1,500 physicians, businesses, and individual investors throughout the country. we would welcome the opportunity to speak with you about how we might be able to bring value to your wealth planning. OJM partners have authored several books, all of which are available to webinar viewers at no charge. You can get a free print copy or ebook download by texting OJM Web to 555-888. You can also visit ojmbookstore.com and enter the code OJMWeb at checkout. In addition to a free book, OJM Group also offers webinar viewers a complimentary consultation where we can answer your questions and see if our firm might be a good fit for your situation. Visit ojmgroup.com or call 877-656-4362 to schedule your free consultation. Enjoy the free copies of our books, and we hope to have the opportunity to speak with you. Thanks for watching.